Finally, Friday morning, welcome back to Squawk Asia. Industrial commodities are seeing a broad-based fall after talk that China is launching a probe into the rubber market. Traders fearing any expansion to the investigation could cause Chinese investors to sell off metal positions. Let's get to John Barratt, Managing Director of Commodity Broking Services, joining us live down in Sydney. John, good to see you. Good morning. I mean, how widespread could this get, do you think?
Oh, look, I think it's like any probe that you get in terms of trading and concerns. It becomes a temporary fixture. They look to solve what the issue is, and then they get on to what they really need to do, and that is to continue their growth. So temporary, yes, it could be a concern, but overall I think it'll end up being just a good area to start to buy some good commodities.
John, you know that copper is under pressure, but we could be in for some positive news vis-à-vis the stimulus over in the US and also in China. You're looking for some appreciation in that market?
Yes, Sheree, look, this is going to be interesting, and I think it's worthwhile having a look at, because we are only sort of 15% off highs for copper. And when you look at it, you can see exactly what's going to occur, particularly with the stimulus, perhaps also a QE2 out of the US. And also that bill to actually in China to put together a lot of low-cost housing. And when you look at that in a market that is in a structural deficit, you could probably suggest that we could see a good squeeze for copper coming on. So any dip, I think, would be a good opportunity just to start to pick up some cathodes of copper.
We're in for a deluge of China data, John, in the coming days. How closely is the commodities market going to be watching, especially the CPI number out tomorrow for August? If we do see a higher than expected read north of 3.4%, that could potentially be negative because it could spell more tightening measures by the PBOC.
Oh, look, very much so, Sheree, and that's obviously something we're going to really focus on to see what the numbers actually are. Now, you've also got to think that they're very good at controlling their pricing and their inflation. Remember, it wasn't long ago that we had food inflation upwards of 20%, but that seems to be contained. So yes, it's something we're going to watch in terms of what they might do in terms of tightening, but at the end of the day, I think it's all well controlled, and if anything there, I still feel that their growth is still untapped, and any opportunity on a dip, I think, will be looked at.
Yeah, John, listen, let's take a step back. I mean, the CPI numbers, I mean, it's part of a series of data that China's pushing forward for release to tomorrow, Saturday. I think the data was supposed to come out early next week, Tuesday or something. I mean, does that alone give you a very, very strong signal that, you know, these guys are going to do it 27 basis points, as they always do, up? I mean, they tend to like to do it on the weekends to catch everybody off guard.
Well, I think it sort of gives you another day to think about really what's happening. And I think that you could see it, or perhaps they're going to just play it that way, just purely to get the market off guard, or even get the market to really think about what's actually occurring, give them a day to settle down. So things like that, or announcements like that, are generally there to placate the market so we don't get too many knee-jerk reactions, or just to let people think a little bit more about what's actually occurred.
John, silver versus gold, which one is going to win out?
I think silver, Sheree. I think that gold in itself it attacked that 1265 area last night, and we're back at 1244 now. Silver, I think, is still the play on the ratio, so I prefer to be long silver and short gold, actually. We're certainly taking some profits off the table on gold at the moment. We feel that it's slowing down a little bit, and it's a good opportune time. I would not want to put new longs on unless we did break 1265, but at the moment I see it as an opportunity perhaps to be long silver and short gold.
Okay, here's the thing, though, John. We've been talking about this all morning. In fact, for the last couple of days or so, this is European banks, especially the big German ones, in need of more capital. It's the whole Basel III thing, pressuring them to up bolster their Tier 1. It's got a lot of people thinking that, connecting the dots down the line and thinking this, a good trade would be short euro, long gold. I mean, we've seen that before. It's why the recent surge in gold.
Yeah. Well, I think this is it. I mean, when you look at what's happening in Europe, and that's that risk aversion, I was taken back by that bond auction in Portugal last night, and also the news with Anglo-Irish. And when I looked at it, I thought, hey, that's interesting data, because that would have pushed me onto that risk aversion trade because of general concerns, that we have in Europe overall. And that would have said that I would be buying gold rather than not seeing gold come off. So when you look at it, you can say, well, okay, well, people are taking that news on board and they're not doing anything with it, then perhaps they're okay with the state of play at the moment. And that's what I think.
Okay, all right. Listen, John, I've got to go. Always useful talking to you. Thanks for the time. John Barratt there, live from down in Sydney.